The automobile industry is currently caught in an intriguing crisis that cannot be ignored. The sector is confronting a major drop in car demand, resulting in an excessive backlog of unsold vehicles that manufacturers are finding hard to dispose of. Initially, it was generally believed that this would lead to a steep drop in car prices. But the car market has shown a high degree of volatility and unpredictability recently. While prices had a brief dip, they are now on an unforeseen rise, stunning everyone. The car market's current condition can only be characterized as the most unusual and strange it has ever been. Visiting auctions has lately been marked by an atypical occurrence. Cars simply can't find purchasers, leading to an unmatched amount of vehicles remaining unsold, setting new records consistently. As a result, auction platforms are battling to manage the excessive car surplus. Add to this, there is a continuous stream of reclaimed vehicles entering the market every week. To those who might not be familiar, repos is short for repossessions. It denotes when a car loan provider reclaims a vehicle because the borrower has failed to make loan payments. Repossession can occur without any advance notice or court authorization, depending on the laws of each state. With the continuing economic difficulties and financial stress, a lot of people are struggling to meet their car payment obligations. This has led to an increase in the number of repossessed vehicles on the market. Adding to the complexity and intricacy of the situation is the undeniable fact that the value of cars is continuously decreasing, as evidenced by trusted sources such as Kelley Blue Book. As the tax season approaches its end, the values provided by these reliable sources begin to decline even further. This descending pattern has a direct impact on the dynamics of the market. Prospective buyers, well aware of the falling values, become increasingly cautious and hesitant in their decision-making process, resulting in a decrease in auction bidding activity. Consequently, this exerts a downward pressure on prices, hindering the achievement of successful sales and further exacerbating the decline in the car market. Car dealerships find themselves in a comparable and equally challenging predicament. They are grappling with an increasingly difficult situation where cars are remaining unsold, and the pressing question of how to generate more income looms prominently. These dealerships heavily rely on flooring lines, a type of credit utilized to finance their inventory, and the mounting pressure from these lines forces them to sell cars swiftly in order to repay their accumulating debts. To compound matters, banks are receiving a significantly low number of new car loan applications. Various factors, such as economic instability, inflation, and rising interest rates, are dissuading people from applying for loans to purchase cars. Given the current circumstances, one would naturally expect that the combination of an abundance of unsold cars at auctions, congested dealership lots, and a scarcity of car loan demand would inevitably result in a decline in used car prices. However, the actual situation is quite the opposite. Despite stagnant auction sales and a growing inventory at dealerships, prices have either remained stable or, in some cases, have even risen. This surprising trend can be attributed to the ongoing expenses that dealerships must bear while their cars remain unsold, including financing costs, advertising expenses, and general upkeep. In order to offset these financial burdens, dealerships are hesitant to lower prices and instead maintain the hope of securing a significant sale that would sufficiently compensate for their expenses. The main problem currently impacting the used car market is a lack of more reasonably priced models. Dealerships are stuck with an excess of high-priced used cars that come with optional features. However, most used car shoppers are looking for more economical options. This mismatch between available stock and consumer demand means those planning to trade in their used cars might get more favorable deals. Dealerships laden with an abundance of expensive vehicles might be more willing to negotiate trade-in prices. Conversely, buyers looking for affordable used cars might face a scarcity of choices due to the lack of budget-friendly models. There has been a minor dip in used car prices of late. The Manheim Used Vehicle Value Index noted a 2.7% drop in used car auction prices in May compared to April, signifying the second straight monthly reduction. Compared to the same month last year, wholesale prices saw a 7.6% decrease, suggesting a constant year-over-year fall. Despite some minor price upticks in certain months, the general trend is unequivocally downwards. Changes in wholesale prices usually reflect in retail prices after about 6 to 8 weeks. Hence, it is anticipated that retail prices for used cars will decline further in the following weeks, mirroring the falling wholesale prices. However, returning to pre-pandemic levels soon seems improbable, as the car market continues to adapt and adjust to fluctuating circumstances. As per a UBS Global report, car production is anticipated to surpass sales by nearly 6% this year, leading to an excess inventory of roughly 5 million cars. This surplus presents a hurdle for car manufacturers who might have to introduce price reductions to stimulate sales. However, these price cuts might not come into effect until the latter part of 2023. The aggressive production plans by automakers have sparked worries about overproduction and consequent price pressures. Faced with an oversupply, automakers will be tasked with finding buyers, potentially requiring aggressive pricing tactics. While the precise timeline for price drops is uncertain, it is expected that increased competition among manufacturers in the second half of 2023 will lead to price cuts to clear out the excess inventory. This potential price war in the automotive sector is likely to impact both electric vehicles, EVs, and traditional combustion engine vehicles widely. Car manufacturers are cognizant of the importance of effectively handling this situation, acknowledging that an inventory glut can strain their finances and disrupt future production schedules. They are keeping a close eye on market trends and are ready to modify their pricing strategies as needed. Analysts expect family car producers to be most affected by price reductions, while luxury car makers are likely to fare comparatively better. This variation stems from differences in target demographics and consumer preferences. As automakers compete for cost-conscious customers, family cars, generally priced more affordably, might experience more significant price pressures. On the other hand, luxury car producers, targeting a specific market with a higher willingness to pay, can keep their pricing relatively stable amidst market swings. The blend of rising energy costs and the initially higher prices of EVs may make them unaffordable for many potential customers. Recognizing the need to boost demand, Tesla, led by Elon Musk, has made a proactive move by drastically reducing its car prices in the UK. This strategic action has placed some of Tesla's more affordable models in the same price bracket as mainstream brands like Kia. Reacting to Tesla's price reductions, other car manufacturers, including Ford Motor Company and Lucid, have also cut their EV prices, aiming to stay competitive in the market. Additionally, there are signs that car prices across various segments are beginning to soften. Data from Cox Automotive shows a 2.4% decrease in wholesale used vehicle prices in March compared to the previous year. However, it's worth mentioning that prices saw a minor 1.5% rise from the previous month. Likewise, a Kelley Blue Book report in March underscored a steady decrease in new vehicle prices for 3 consecutive months, indicating a persistent trend. Despite these declines, it is vital to remember that car prices are still at historically high levels. Please feel free to express your views on this subject in the comments section below.